I'm Kelsey Hipkin with the CREB Now Real Estate News. Today we sat down with investor, author, and TV personality Kevin O'Leary to talk about everything from real estate to his favorite guitarist. Mr. O'Leary, what is your definition of success?
Success is defined by getting to a place where you're safe. Obviously, when you're young, you're taking on debt. There has to be a point in your life when you stop doing that, you become an investor. So I'm trying to get people in Canada and around the world, actually, to think about what they have to do during their working years and their careers, that when they end up in their 50s and 60s, they're financially secure. That's what I'm all about.
And speaking of money, what's the biggest downfall you see in people trying to start their own business?
The number one issue is watching free cash flow. In other words, the start of a business is always, and 99% of the time, it loses money. And you have to set a time frame. And I suggest it's 36 months. If you can't make money in a startup after 3 years, it's not a business, it's a hobby. And it's draining your family resources. You've got to take it behind the barn and shoot it and try something else. It's the only thing to do. And believe me, I see hundreds of startups. I've got 21 different companies I'm invested in. I see the same mistakes happen over and over and over again. It's about watching the free cash.
Can you balance good customer service without sacrificing a profit?
Absolutely. In fact, customer service is actually a secret weapon to enhance margins. I argue that if you're providing stellar customer service in the top quartile of your competition, you can actually raise prices 15% without losing customers. And it's what I do with my companies. The first thing I look for a really high return on investment is to enhance the customer experience, because people are loath to change services or products if they're being well served, and they're willing to pay more for that. That's the biggest opportunity there is in business today.
And customer service has a lot to do with your employees as well. What advice would you have for real estate brokers whose employees are essentially self-employed?
The key to entrepreneurship is to understand the culture of your organization, even if it's only 3 people. If everybody shares the common goal, that's more than 75% of the challenge. Because if you have an employee that goes off the reservation and doesn't actually agree on the path of the business or the strategy of selling or the customer service levels you want to maintain, there's only one option: behind the barn and shoot them. I hate to say that, but you can't have that problem within your organization. It's tough love, but I've lived through it hundreds of times. You need a culture, a winning culture that you can sustain. And I'm all about paying people well as long as they can deliver on that.
What's the best way for real estate agents to be successful in an industry largely influenced by external factors?
The key to real estate sales, particularly in residential, is to be extremely knowledgeable about your market. Your whole added value is your understanding of property by property by property, knowing more than the potential buyer or seller knows. That's where you're really adding tremendous support and value. And so I suggest that great brokers and great teams spend a lot of their time, up to 20% of their day, researching their market, understanding when somebody says, I want to list my house at $4 million, and every trade on the street has been at 3.2, they're able to explain with solid backed up data why that's not going to work. That's the key. And so I found over the years in working with brokers, it's knowledge of the market, being able to communicate with your customer, both buyer and seller, and above all, knowing more than everybody else does. That's how you make money.
And on those same kind of external factors, what are your thoughts on the oil price drop?
This is a very interesting time in Calgary and in Alberta, and for not only domestic buyers and sellers of real estate, but global investors, and that's what I am. And so I look at the real estate data in every Canadian city almost weekly, and I start at just the trading of condominiums, which are the largest commodity in real estate there is. And remarkably, through this period of tremendous volatility in oil prices, which we're still in the middle of right now, you haven't seen a crack yet in real estate here, because it's such a tight market. There's such a demand for housing. Now, if we go out 6 months and 2 years, what will that look like? My guess as an investor is it's going to slow capital appreciation, but not have a significant impact on baseline pricing today. So my guess would be that you're not going to have a significant increase. In other words, maybe a 2% increase in valuation, but not a 30% drop in value. Even though Calgary's had this really interesting problem with the recent flooding, it's remarkable how fast the recovery happened around the river area, because I looked at the sales of those houses too. I do a lot of research in these sectors to try and figure out what's happening. And I think this is a remarkable market because there's a lot of demand for housing even right now. And so we'll have to wait and see. Now that's one aspect of it. The other is we have no idea what's going to happen to interest rates. So, going into, I brought with me today, we'll be discussing the forecast of interest rates in minutia over the next 18 months. And it looks like to me no more than a 25 basis point increase, which is not going to have any material impact on mortgage rates. So I'd say it's pretty good sailing, even though there's a lot of angst in the market right now.
Do you see the overnight rate increasing this year?
Yes, I do, by about 25 basis points sometime in the fall. That's what I'm forecasting, which really isn't going to have that big an I mean, what would really change real estate pricing, both commercial and residential, would be 200, 300 basis point increase, which I just don't see happening for years.
So we're not headed for a recession?
No, I don't think so. I think what's going to happen is there's going to be a consolidation in the energy patch of debt-laden small-cap companies. They're going to be merged together through forms of bankruptcy. But the large players have really good balance sheets, and so we just have to wait for this finishing decline of oil. We don't know it's going to end up with a 3 handle in front of it or a 4, but we're in the 7th inning of price declines anyways. And so that impact is already impacting the market. And this time what's different is really strong balance sheets and a more optimistic tonality about pipelines. Obviously, at some point, Keystone and this east-west focus, this is all going to be good for Alberta and for housing, actually.
You have kind of touched on it, but your thoughts on real estate as an investment?
Well, here's what's so fascinating about real estate. For 17 years now, we haven't had a material correction. And when I say material, I mean north, double digit, 12, 15, 30%. That hasn't happened. And so what has happened with real estate has become, and I think there's a little bit of risk in this, but I'll give you an example. Probably a glowing example was a transaction recently in New York City, near the Crown Building in Manhattan, for 1.5% cap rate. That is unprecedented. That means rents would have to double to get a 3% return in Manhattan, which isn't going to happen. So what's effectively occurring is, because there's absolutely no yield left in the 10-year bond, it's in fact less than inflation, investors, large institutional investors, and to a certain extent it's occurring right down to apartment and housing purchases, are substituting real estate for bonds. They're basically saying, I think a piece of real estate, a hard asset, is as safe as a 10-year Canadian bond, in the sense that if rates go up, I have a potential to increase rental rates, or there may be capital appreciation. But if I buy a 10-year bond that's yielding 2.4%, I'll lose money if rates go up in the next decade, for sure. So real estate has become a substitute in a way that it's never occurred before. People will actually take money out of GICs and buy real estate, assuming it's just as safe. That could be a mistake, but so far it hasn't stopped them from doing it.
There's a lot of realtors out there. How can they stand out in a crowd?
So the key to standing out now is to understand the instruments of marketing that are available. In the last 7 years, social media has become a major force in the real estate market. Being able to broadcast yourself as an informed broker in your local community is much easier than it was 10 years ago, because the advertising vehicles were print and banners only. Today, social media is crucial. All kinds of platforms, from Instagram to Twitter to Facebook, that should be used by someone that's saying, look, I know something about this market, I can help you, here's what I do, this is the kind of information I provide you, here's how I can make this process less traumatic. People selling houses, there's always an emotional aspect to it. So having somebody with people skills on your team is really important to deal with the angst and insecurity in the process and the paperwork and everything else. But today, I find if you look at successful brokers and realtors, they have built a really strong web presence and a very large database through email and customers that they've serviced and friends of those customers. They're constantly broadcasting information. I'll get a printed newsletter from realtors I know. I will also get the same information online. It's also repeated on their websites and their Facebook sites. I can see them in the market, so when the day comes when I want to sell my place, they're top of mind. You have to stay top of mind. You can't be sitting out there for years and not communicating with the potential sellers and buyers, and that's what I think is different now.
Cool. One last question.
Sure.
The greatest guitarist who ever lived?
Oh, you know, I have to say that probably Jeff Beck is the greatest guitarist. You know, the big debate that goes on with guitarists every day is Jimi Hendrix versus Jeff Beck, and they are so completely different. And sometimes when I listen to Hendrix, you know, he is the granddaddy of blues, but Beck took it to a different place. He blended jazz with blues and has created some of the most remarkable recordings in history, working with George Martin, who produced the Beatles. I mean, it was really, and so if I had to make a decision, and I could only bring one set of albums to an island, it would probably be Beck's work from Beckola on, because I think he's going to go down and be remembered as a virtuoso master of blending genres. And you know, you're getting me going on a debate that we could talk about hours about.
For sure.
Thanks.
I think you've got a jet, though.
Yeah, thank you very much.
That's everything. Thank you very much for your time.
Take care.